I think you're right. I think, as one of your earlier guests mentioned, the change in the leadership at the Fed has helped push out the idea of when tapering will come. And the second issue has also been that with the uncertainty about the U.S. budget process and the fact that there's so much budget uncertainty right now, that probably has meant more scope for monetary easing, or at least a perception that we could see tapering being pushed out further. Well, right now it's very difficult to tell because we still don't know exactly what's going to happen in terms of the U.S. budget discussions and what impact that will have on growth in the fourth quarter. Our feeling now is that tapering is most likely to start at the beginning of next year. I think that the beginning of tapering is not the only question, it's also what type of tapering we're going to have, because we could see a situation in which the Fed comes out and says, yes, the beginning of tapering will be further off in the future, but when we start tapering, we're going to taper an awful lot more quickly. So you shouldn't necessarily assume that the end of QE has really changed all that much. That's also one uncertainty which the market is facing at the moment. Well, again, over the medium term, one of the areas where we think valuations are very attractive in equity markets is still very much Europe. We like European equities. We also like European senior bank debt, for example, which we think offers a good risk-return profile. In equity markets in Asia, we're still believers in the Japanese story. We think that Abenomics will ultimately work. We'll start to see a third arrow, which is rather stronger than people are expecting at the moment. So Japanese equities will be a good medium-term opportunity. We like Korean equities too, for valuation reasons. Other Asian equity markets we're somewhat more neutral about. We're looking really for a further decline in the Chinese equity market before we recommend buying. And the Southeast Asian markets, which have done very well over the past 3 years, we think have got to valuation levels where they really aren't attractive, and we should see a bigger pullback in those markets before we recommend buying. Well, I think that's a complicated question because if they don't meet the October 17th deadline, but it looks very clear like they're going to come up with a deal in the very near term, I think the markets will continue to be fairly calm about that. The perception is that the absolute critical date is no longer the 17th of October, but sort of more towards the end of the month, where bigger maturities are due, and we have bigger cash calls on the government. So that would be sort of an immediate response. I think in the longer term, if the market feels we're in a fiscal situation which is uncertain in the US, oddly enough, that could be a help for markets because it could again push tapering further out into the distance. And as we've seen, the concept or the idea that liquidity will continue to remain fairly generous has actually been supportive to a lot of emerging markets over the course of October.